Could the Mar-a-Largo Accord be setting the stage for a dangerous asset bubble? The Accord structure is to devalue the dollar to bring manufacturing back to the United States. Stick around to understand the dark side of this economic shakeup that will ultimately have an effect on your investments. My name is Roy Mason. Welcome to the channel. My goal is to bring you policy and news events that will affect your investments that the major news networks won't normally cover. I left the link in the description below for my Discord group where you can find out more very important information in regards to financial education. The core components of the Mar-a-Largo Accord is to devalue the dollar to boost manufacturing back to the United States. My opinion is manufacturing for the United States is very risky. Will there be more hiring in the United States? That's one of the goals. But we also know that AI and robotics is taking over manufacturing. The goal is to make the United States a global trade world partner through devaluing the dollar that's already devalued. And then on top of the tariffs, you're paying more for products with a weaker currency. So you have to work more and you have to spend more to get your everyday necessities that's being imported. Another core component is tariffs. Tariffs create trading partners and forces those trading partners into agreements on currency deals. So China is the global trade partner. And what China has done is it has devalued its dollar so that it would be able to export more and other countries will be able to import more. To become the global world trade power, you would have to be the owner and not the consumer. You would have to export more than import. And right now, the United States is the importer leader. Another key component to this Mar-a-Largo Accord, and this one strikes me as being very funny, is that the Accord wants to create a sovereign wealth fund. But how can we have a sovereign wealth fund when the United States operates at a deficit? You would first have to get out of deficit to even fund your wealth fund. So this one is just a little bit confusing. But once the dollar is devalued, I guess this is the plan, and more manufacturing is brought to the United States with the devalued dollar, with tariffs that's driving your products that you use every day up, then you would be able, or the Mar-a-Largo Accord would be able to add money or add assets to the sovereign wealth fund. Now, the Mar-a-Largo Accord is dangerous when it comes to creating an asset bubble. Once you devalue the dollar, you create inflation. You have inflation, then you have tariffs with your products that you use every day becoming more and you're paying more money for. For example, we see that once the dollar was devalued in the real estate market, once the dollar was devalued by the rates being kept lower, it drove assets up. A house that normally cost $250,000 was now $400,000. Now, there's going to be other asset bubbles and other investments because people are going to want to put their money in safe investments because the dollar is getting weaker and it's not giving you that percentage of return that you deserve. And we can see it with gold. Now, the other sectors that are going to experience this is cryptocurrency. You're going to see the cryptocurrency market balloon to unbelievable prices that you have never seen before. And also technology stocks. Now, how can you make money off of what I just educated you on? I would buy cryptocurrency and technology stocks right now before they balloon to an all-time high. And then once they reach the peak of the market, I would sell because the asset bubble is going to pop. And we can see that in the real estate market. Now we have stagflation in real estate where houses are not really moving and we see rent prices coming down. So once the top is reached in cryptocurrency, you sell. When it crashes and it dips, you buy again, and then it will eventually revive itself and go back up. You're making money all the way to the top. You're making money when it dips, and then you're making money when it goes up again. We're in for a devastation of dark times when it comes to finances and investments. A lot of people right now are paying more, and they haven't really gotten out of the situation of how inflation wrecked their 401ks and their savings accounts. And we haven't seen prices at the grocery stores for clothing, for entertainment go back to normal. Prices at Disney is very unaffordable. I don't even know how Disney is staying in business with the prices that they have. But we are in a crucial economic crisis that you have to maneuver through. I'm going to leave my link in the description below for the Discord to give you that financial education and give you a preview of investments in regards to cryptocurrency, the infrastructure of cryptocurrency, and how you can stay ahead of the curve when it comes to new investments, new opportunities, and also new information.